What's driving markets? Welcome to Market Take. Each week, we'll bring you our insights on the latest market and economic trends that are impacting investments. I'm your host, Paul Henderson, Senior Portfolio Strategist at the BlackRock Investment Institute. This week, we discuss stablecoins, what they are, how they're being regulated, and what that could mean for their growth. New US legislation is cementing the role of stablecoins as part of the future of finance. We think their adoption could bolster the dollar's dominance in global markets. Stablecoins are digital tokens pegged to a fiat currency, typically the US dollar, and backed by reserve assets. They fuse the frictionless transfer of cryptocurrency with the perceived stability of fiat currency. The US is advancing several laws aimed at bringing stablecoins and other digital assets into the mainstream. The first prevents the Federal Reserve from issuing a central bank digital currency. The second determines which federal agency oversees different tokens. The Genius Act creates a comprehensive stablecoin framework. It defines stablecoins as a payment method, not an asset, spells out who can issue them, and prohibits these issuers from paying interest. We think it has implications for the US dollar and US Treasury bills. US Treasury bills are one of the assets the Genius Act allows stablecoin issuers to hold in reserve. So growing demand for stablecoins could boost demand for Treasury bills. But we think that demand could be offset by two things. One, money flowing out of assets similar to Treasury bills, like money market funds. And two, a likely surge in newly issued Treasury bills. That means the impact on bill yields may be limited. The Genius Act could reinforce dollar dominance by enabling a tokenized US dollar-based ecosystem for international payments. Stablecoins may offer users in emerging markets easier access to the US dollar over volatile local currencies. Yet in major economies, the ban on interest payments could slow adoption. The ban aims to protect banking by preventing a low-friction rival that could compete with bank deposits and hurt traditional lending. But the US is not alone in acting. If other countries permit interest-bearing stablecoins or pursue central bank digital currencies, it could weaken the dollar's role in finance, though the US could then permit interest. Here's our market take. We see stablecoins as a new part of the future of finance, and this US legislation is aiming to put the US at the center of cryptocurrency innovation. We think the Genius Act may have a limited impact on US Treasury bill yields. We see it reinforcing dollar dominance, although we're watching developments in other countries. For details, read our weekly market commentary. Go to www.blackrock.com/weekly-commentary. Thank you for tuning in. If you've enjoyed this episode, subscribe to Market Take wherever you get your podcasts.
This material is intended for informational purposes only and does not constitute investment advice, a recommendation, or an offer or solicitation to purchase or sell any securities, funds, or strategies to any person in any jurisdiction in which an offer, solicitation, purchase, or sale would be unlawful under the securities laws of such jurisdiction. The opinions expressed are as of the date of publication and are subject to change without notice. Reliance upon information in this material is at the sole discretion of the listener. Investing involves risks. BlackRock does and may seek to do business with companies covered in this podcast. As a result, listeners should be aware that the firm may have a conflict of interest that could affect the objectivity of this podcast. For more information, visit blackrock.com/thebid.